Hello everyone, you are watching Saheb Academy. If you like our videos, then please subscribe to our channel and also hit the bell icon for the regular updates, and also follow us on Instagram, Saheb Academy. Now let's go to the video.
Hi everyone, welcome back to the fifth video of ESOP, Employee Stock Option Plan. This chapter of Group 2 Advanced Accounts we have started. Now in this fifth video, what we're going to do is we are going to see the illustration 6 of the study material. And the main thing about this problem is here we have got performance condition. Now so far the problem which we have solved, the first problem, the second problem and also the third problem, see here, the illustration 2 of the study material, here we have got what service condition, that the employee has to be in the company for 2.5 years, then only the options will become eligible. Yes, and then in the problem 2 also, the illustration 4 which we have solved, there also what was there, next 3 years they have to be the employee for next 3 years, working for the Ajanta company over the next 3 years. And then in the latest problem, the previous video, illustration 5, also the same thing, right? Here also the vesting period was given exactly 4.5 years. The vesting period was fixed 4.5 years. But now in this question it's not like that. In this illustration 6, here the vesting period is variable. It depends upon the performance of the employees, performance condition. The performance condition is there. So we are going to see this question, and please make sure you have watched the previous videos first, okay? And especially the conceptual video, the first video where we have discussed lots of things really, the ESOP timeline, the important terms you need to know, and then we have also discussed the accounting treatment, the journal entries, and many more things, right? So please make sure you watch the previous videos first and then come back to this video, okay? Okay, then let's start. Now here we have the question. Let's go through it once. Let's try to understand what is happening over here. So see here, Choice Limited grants 100 stock options to each of its 1,000 employees on 1st April 2011 for rupees 20. So till here we come to know that this company is offering 100 stock option to each of its 1,000 employees, right? So that means what? 1,000 employees are there and 100 stock options are being offered to each of the employees. So just multiply that, you will get total number of options being offered by the company, right? 1,000 employees are there, to each of them 100 options are being offered. So into 100, that's equal to 1 lakh. So 1 lakh options are offered in total, 1 lakh number of ESOPs. Is that clear? Yes. And this is done on the date. On which date? On the grant date, the date at which the ESOPs are offered. 1st April 2011. Right, it's the grant date. And then the price at which these stock options are offered is rupees 20. So that's what? That's exercise price, the price at which, the concessional price at which the ESOPs or the stock options are offered, right? Then they are saying, depending upon the employees at the time of vesting of options would be exercisable within a year it is vested. What does it mean? It means that if your options become eligible, if you complete the vesting condition, the vesting period, and your options become eligible, then in the same year in which it becomes vested, in which it becomes eligible, in the same year you have to exercise the option, you have to buy the shares with those options. That's what they are saying. जब भी तुम्हारा ऑप्शंस एलिजिबल होगा, जो भी साल में होगा, उसी साल में तुमको क्या करना है? तुमको परचेज करना है शेयर्स, राइट? यू हैव टू एक्सरसाइज द ऑप्शन and purchase the shares, right? That's what they are talking about in this sentence. Options would be exercisable within a year it is vested, right? Then the market price of the share is rupees 50 each. The market price. So now what do we have to do? Is the value of option given over here? In the whole question, the value of option is not given. I mean the fair value of option. So what do we have to do? We have to calculate it through the intrinsic value method, right? So what's that? Simple, we all know that market price minus exercise price, you will get value of option. 50 market price minus exercise price, the price at which the ESOPs are offered. If you subtract those two together, you will get value of option. We all know that, right? We have been doing since last 3 problems, right? Then we have got number of options. We have already done that. 1,000 employees into 100 option, 1 lakh options in total being offered here, right? And here we have the grant date. The grant date is what? 1/4/2011, right? So that's 1st April 2011. That's a grant date. Now we have to understand all these things, so let's do that. Then here it is said these options will vest at the end of year 1 if the earning of Choice Limited is 16%. Now what is this? What are they talking about over here? Here they are talking about the performance condition. Now I have already told you that this illustration 6 is based upon the performance condition. What is this? See, you already know that to be eligible for ESOP, employee to be eligible for ESOP, the options to become vest, they have to fulfill the condition. Then only they will be able to exercise their right and purchase the shares of the company at low prices, right? So for that they have to fulfill the condition, and those conditions are called eligibility conditions or vesting condition, and those are of 2 types, service and performance. Now in the previous 3 problems which we solved, there was service conditions, right? You have to be employed for a certain period, and the vesting period, the eligibility period was fixed 2 years, 3 years, 4.5 years, like that. Yeah, you have to be employed for a certain period. If you leave our company in that vesting period, then your options will be of no use. It will get lapsed. Yes, that's what we saw in the previous 3 videos. Now here we don't have service condition. Here we have got performance condition. The employees will be given some targets to achieve. If they achieve the targets, अगर वो targets achieve करते हैं employees, then only their options will be eligible or vested. Then they will be able to use those options and purchase the shares of the company at low prices. Is that clear? So that's what we have in this question. Okay, so what can happen when you get a question? Either you can get service condition. Okay, 90% of the time you will get service condition, right? Exactly, the vesting period will be mentioned, 2 years, 3 years, 4 years. Exactly, you have to be employed for certain period. Or sometime what will happen, like these targets will be given. If targets are given, then that's performance condition, and the vesting period is not accurate, it will change. Okay, so in the calculation, while calculating employee compensation expense, you have to be very careful with the vesting period, the fraction which you take in the formula. Yeah, the fraction which you take over here, right? The lapsed vesting period divided by total vesting period, you have to be very careful over here. Yeah, every year, at the end of every year, when you do this calculation for calculating the employee compensation expense, how much to take it to P&L, what you have to do here, you have to be very careful. Okay, so we'll see that while solving the problem. So what was I saying? Performance condition, right? So whenever the performance condition is given, you have to be careful with the vesting period, right? So let's see that. See here what they are saying. These options will vest at the end of year 1 if the earning of choice limited is 16%. अगर choice limited की earning 16% होती है, then the options will become eligible, it will become vest, and the employees will be able to purchase the shares, right? And they are talking about at the end of year 1. So when we reach to at the end of year 1, we'll come to know whether we have achieved the target or not achieved the target. If we have achieved the target, options are eligible. If we have not achieved the target, then what will happen? Then we have to consider the vesting period properly. See here, if we have not achieved the target, then in the calculation at the end of year 1, what are you going to take here? We have reached at the end of year 1 the lapse vesting period. कितना टाइम गुजर गया? 1 साल गुजर गया. At the end of year 1 पता चलेगा ना 16% हुई है क्या नहीं हुई है earning, right? At the end of year 1 we will come to know whether our earning is 16% or not. If the earning is 16%, then directly we can pass the exercise entry. If the earning is not done, if the target is not achieved, then we have to wait till the next year. So in the first year we have to recognize the expense, isn't it? Employee compensation expense, and we have to transfer it to profit and loss. तो कितना करना है वो calculation करना पड़ेगा. So what we have to do, if the vesting period is more than 1 year, of course we have to allocate properly, right? So we have to use this formula, and in this formula, while taking the fraction, what you have to do, 1 साल गुजर गया, at the end of year 1, 1 साल गुजर गया, 1 year has been passed, so you will take 1 divided by the total vesting period. You will think in the next year we might achieve the target. In the next year, what is the target? See here. Or it will vest at the end of the year 2 if the average earning of 2 years is 13%. अगर average earning of 2 साल of 2 years is 13%, तो दूसरे साल के एंड में वेस्ट हो जाएंगे, ऑप्शन वेस्ट हो जाएंगे, राइट? सो वी विल एज्यूम एट द एंड ऑफ ईयर 1. हमें फ्यूचर का थोड़ी पता है, क्वेश्चन में दिया हुआ है, इन द क्वेश्चन इट इज गिवन, बट प्रैक्टिकली सोचो, प्रैक्टिकली थिंक प्रैक्टिकली, एट द एंड ऑफ ईयर 1 क्या हमको मालूम पड़ेगा? इन द कंपनी, एक्चुअल कंपनी नहीं मालूम पड़ेगा. सो व्हाट वी आर गोइंग टू डू, वी आर गोइंग टू थिंक इन द नेक्स्ट ईयर इट माइट happen, yeah, we might achieve the target. So that's why what we are going to do at the end of year 1, we are going to take the fraction 1 by 2. We are going to take 1 by 2. Okay, then it will vest at the end of year 2 if the average earning of 2 years is 13%. Now when we reach at the end of year 2, we come to know, if we come to know that the target is achieved, then directly option will be vested and we will pass the exercise entry. But if it is not, if the target is not achieved, target achieve नहीं हुआ, तो हम क्या सोचेंगे? देखो क्या बोलता है क्वेश्चन, इट विल वेस्ट एट द एंड ऑफ द थर्ड ईयर इफ द एवरेज अर्निंग ऑफ 3 years, ये साल की अर्निंग पूरा प्लस करके डिवाइड बाय 3 करने का, राइट? एवरेज अर्निंग ऑफ 3 years विल बी 10%. तो क्या सोचेंगे हम एट द एंड ऑफ ईयर 2? वी विल थिंक दैट मे बी इन द थर्ड ईयर वी विल अचीव द टारगेट. सो वाइल डूइंग द सेकेंड ईयर कैलकुलेशन, एट द एंड ऑफ सेकेंड ईयर, व्हाट फ्रैक्शन यू आर गोइंग टू टेक? At the end of year 2, you are thinking if the target is not achieved. If the target is not achieved, again you have to spread it to third year, right? अगर टारगेट सेकेंड साल में भी अचीव नहीं हुआ तो तुम्हें क्या करना पड़ेगा? जो एम्प्लॉय कंपनसेशन एक्सपेंस है वो अगले साल को भी एलोकेट करना पड़ेगा. इन द नेक्स्ट ईयर ऑल्सो यू विल हैव टू एलोकेट. सो अगेन यू विल हैव टू कैलकुलेट एम्प्लॉय कंपनसेशन एक्सपेंस, या हाउ मच टू टेक टू द सेकेंड ईयर. सो व्हाट यू गोइंग टू डू, while taking the vesting period, ये लेते वो क्या करेंगे? कितना टाइम गुजर गया? एट द एंड ऑफ ईयर 2 मतलब 2 साल गुजर गए. इफ 2 year has been passed and the total vesting period is at the end of year 1 we thought the total vesting period is 2 years. Yeah, maybe 2 साल में हो जाएगा. But at the end of year 2 we come to know that our target is still not achieved. Then what we are going to do? In the total vesting period we are going to take 3 years. Why 3 years? Why 3 years? Because हम सोच रहे हैं तीसरे साल में शायद टारगेट अचीव होगा, क्योंकि यहाँ पे टारगेट अचीव नहीं हुआ. सो ऑफ कोर्स द वेस्टिंग पीरियड विल एक्सटेंड. समझ में आ रहा है? हर साल के एंड में तुम्हें एस्टिमेट लगाना पड़ता है, बिकॉज तुमको फ्यूचर नहीं मालूम होता. यू विल नॉट नो द फ्यूचर. यू हैव टू मेक एस्टिमेट्स. या यू हैव टू एस्टिमेट्स प्रॉपरली. इज दैट क्लियर? सो पहले साल में 1/2, राइट? एक साल गुजर गया, शायद दूसरे साल अचीव कर लेंगे. मे बी विल अचीव द टारगेट इन द नेक्स्ट पीरियड. बट इधर भी मालूम पड़ा टारगेट अचीव नहीं हुआ. एंड व्हेन यू रीच एट द एंड ऑफ ईयर 2 देन व्हाट यू आर गोइंग टू डू? व्हाट फ्रैक्शन यू आर गोइंग टू टेक? 2/3. मे बी तीसरे साल में टारगेट अचीव होगा 2/3. ओके, और इधर एट द एंड क्या करोगे? 3/3. सिंपल है ना? अगर इधर टारगेट अचीव होता है तो, अगर टारगेट फिर भी अचीव नहीं होता है और कुछ भी नहीं बोला है तो लैप्स करना है. ओके, सो दैट्स व्हाट, राइट? वी विल सॉल्व द प्रॉब्लम एंड वी विल सी दैट. Then they are saying 5,000 options, unvested option lapsed on 31st/3/2012. Let's get the diagram. Let's understand this. See here. तो 3 साल का पीरियड मालूम हुआ. या within this condition we come to know that maybe 3 years, right? Maybe 3 years. So 3 years, take 3 years, 1 year, 2 year, 3 year. Yeah, the grant date was 1st April 2011. 1st April 2011. So then 31st/3/2012, 31st/3/2013, 31st/3/2014. Yeah, like that you can take, right? 1 year, 2 year, 3 year. So in total 3 years. अंदाज से किया हुआ है. ओके, देन व्हाट? देन कम हियर. 5,000 unvested option lapsed on 31st/3/2012. So where does that come? It comes exactly at the end of year 1. What has happened? 5,000 options have been lapsed. 5,000 option lapse हो गए तो हमारा जो कैलकुलेशन रहता है, ये कैलकुलेशन में हम यहाँ क्या लेते हैं? Here we take the number of options expected to be availed. Yeah, number of options expected to be availed in future. That's what we take over here, right? At the end of year 1 when we use this formula to calculate, इधर क्या लेते हैं हम? Number of options expected to be availed in future, expected to be exercised in future. तो इधर जब हम कैलकुलेशन करेंगे और जब उधर हमको लेना पड़ेगा, क्या लेना पड़ेगा? ऑप्शंस लेने पड़ेंगे इधर, right? In this formula, what we are going to take? If 5,000 options have been lapsed on the exact same date, yeah, then in the calculation what we are going to take? We are going to take 95,000. रिमेनिंग ऑप्शन कितने हैं? रिमेनिंग ऑप्शन 95,000 है ना. अगर 5,000 लैप्स हो गए तो रिमेनिंग ऑप्शंस आर 95,000. द टोटल ऑप्शंस फॉर 1 lakh, राइट? सो 1 lakh minus 5,000, दैट इज 95,000. इज दैट क्लियर? Yes. And then what we come to know, see here, 4,000 unvested options lapsed on 31st/3/2013. 31st/3/2013 at the end of second year. At the end of second year, we come to know that 4,000 options has been lapsed. Yeah. If 4,000 options has been lapsed, that means what? 95. बचे थे 95, 4,000 lapse हो गए, so 95,000 minus 4,000, 91,000. Remaining options are 91,000. So at the end of year 2, when will you calculate? If you calculate employee compensation expense, then what you're going to do? You are going to take here 91,000. Clear? Yes. Then, and finally, 3,500 unvested options lapsed on 31st/3/2014. So here they are saying at the end of year 3, 3,500 options has been lapsed, right? So the remaining options on this date for the calculation of the third year employee compensation expense, what will you take over here? You are going to take 87,500. How 87,500? See, remaining options are 91,000. बचे हैं 91,000 है ना? 91,000 were remaining in the last year minus options lapsed 3,500 this year. So minus 3,500, that's equal to 87,500. कोई doubt? Simple है ना? Right. So 87,500 are remaining at the end of the third year. Is that clear? Then what they are saying? See here, then they have given us the average earning, not the average earning, just the earning they have given. Year ended 31st/3, and earnings has been given, just the earnings, 14%, 10%, 7%. But now, what do we need? In the condition they have used average earning, right? In the first year they have said earning, but in the rest they are saying average earning. So we have to calculate average earning. Simple. Average earning calculate करना कौन सी बड़ी बात है? बहुत simple है ना? So see here. First will be 14% only, yeah, earning, directly 14%. Then in the second year, they are talking about what? At the end of year 2, average earning of 2 previous years. See here, if the average earning of 2 previous years is 13%, so 14 plus 10 divided by 2, right? 2 years, right? So 14% plus 10% divided by 2, that is equal to 12. Yeah, so 12% is the average earning of 2 years. इधर जो भी हुआ था, इधर जो भी हुआ था, प्लस किया, या ये दो प्लस किया, डिवाइड बाई 2 किया, तो क्या मिला? 12% एवरेज अर्निंग. एंड देन दे आर सेइंग it will vest at the end of 3rd year if the average earning of 3 years will be 10%. So सब तीनों प्लस करना है, all the three you have to add, right? So 14 plus what, 10 plus 7, that's equal to 31 divided by 3, because 3 years, right? So the average is what, 10.333. So I have just taken 10%, okay, 10.33, so 10%, right? Here we can see that the target has been achieved in the 3rd year only, right? Because here see, the average earning of 2 years is 13%, here it is 12%, not achieved. Here also not achieved, right? 16%, it's 14%, not achieved. In the 3rd year it has been achieved. So we'll get the clarity over here. But in the calculation of employee compensation expense, you have to think you are at the end of year 1, you don't know the future. Like that you have to think and you have to do this calculation. Yeah, we'll see that while solving the problem. Don't worry. Yeah, but it's better to have an overview beforehand so you will not make a mistake. Yeah, then they are saying 850 employees exercise their vested options. 850 employees exercise their options. अगर 850 employees exercise करते हैं, एक employee को 100 option दिए थे, so into 100, that's equal to what, 85,000 options have been exercised, right? So 85,000 options have been exercised, and remaining options were unexercised at the end of the contractual life, at the end of the the exercise period. Contractual life का मतलब exercise period. तो अभी प्रॉब्लम होता है, कितने ऑप्शंस लैप्स हुए मालूम नहीं पड़ेगा आपको. देखो, simple, it's not given, but it's very simple to calculate. The remaining options were 87,500. Within that, 85,000 options were exercised, then the remaining 2,500 options were lapsed. Simple, right? 87,500 options were remaining at the end of the 3rd year. Then we came to know that 85,000 options were exercised. So if you subtract that 85,000 options, then the remaining options has been lapsed, 2,500. Simple as that. Yeah. Yeah, so this is what you have to do. So this is the problem, this is the question just now we saw. Yeah, entire thing we know now. So now let's just calculate the employee compensation expense and let's pass the journal entries. Yeah, let's go to the solution. Now let's calculate the employee compensation expense. Each year how much do we have to take to the profit and loss, right? And we don't know the vesting period also. The vesting period is also not fixed, that's also variable. It depends upon the condition, right? So let's start. See here, the first year what we come to know, the earning is 14%. Yeah, we have not achieved the target, isn't it? The target was 16%. So of course the vesting period is more than 1 year. Yeah, and we also know that the number of ESOPs, the option expected to be exercised in future, is 95,000 because 5,000 were lapsed. So we can safely take 95,000 over here. So 95,000 into value of option, that's what we take, right? Value of option is 30. So into 30 into the lapsed vesting period divided by the total vesting period. Now 1 साल गुजर गया है, lapsed vesting period is 1 year, so 1 by 2. Why 2? Because target is not achieved over here, so we can expect that in the next year we might achieve the target, right? क्योंकि अभी हम क्या सोच रहे हैं, we are at the end of the year 1, right? हमको future कुछ भी नहीं मालूम, we don't know the future. We are expecting that in the second year we might achieve the target. So इधर क्या estimate लगाएगा? As an accountant, as a manager, we will estimate that in the future we might achieve the target. So we will think maybe 2 साल में हो जाएगा vesting period. Okay, so we will take by 2, 1 by 2. Lapse vesting period कितना गुजर गया, 1 साल गुजर गया और शायद 2 साल vesting period है, ऐसा सोचना है तुमको, present में रह के सोचना है. Okay, practically सोचो, right? So 1 by 2 minus 0. Why 0? Because what we do over here, expense already recorded in P&L in previous years. जो भी एम्प्लॉय कंपनसेशन एक्सपेंस पुराने साल में रिकॉर्डेड होता है वो माइनस करना पड़ता है, बट ये तो पहली बार हो रहा है. दिस इज द फर्स्ट टाइम वी आर कैलकुलेटिंग द एम्प्लॉय कंपनसेशन एक्सपेंस. सो प्रीवियसली नथिंग हैज़ बीन रिकॉर्डेड, सो माइनस 0. सो लेट्स पुट दैट इनटू कैलकुलेटर. सिंपल चीज़ है यार, बहुत सिंपल है. 95,000 into 30 value of option, because value of option is what? It's a discount we are offering, right? So that's what we take, right? According to the formula, value of option is a discount that is being offered. So that's what we take. So 95,000 into 30 into 1 साल गुजर गया, 1 साल गुजर गया, 1 by 2, right? And we are expecting that vesting period is 2. So divide by 2, that's equal to 14,25,000. 14,25,000. That's the expense that we are going to take to profit and loss in the first year. Is that clear? Yes. Then we reach to the end of year 2. At the end of year 2, we come to know that 4,000 option has been lapsed. So the remaining options are 91,000. Why? Because 95 minus 4 is 91,000. पहले साल बचे थे सिर्फ 95, इस साल क्या हुआ, सोचो हम प्रेजेंट में है, वी आर इन द प्रेजेंट नाउ एट द एंड ऑफ ईयर 2, राइट. सो 4000 लैप्स हो गए, 4000 ऑप्शंस हैव बीन लैप्स, सो द रिमेनिंग इज 91000. And we also have not achieved the target. Yeah, the target was what? At the end of year 2, if the average earning of 2 years is 13%, then we might achieve the target. But the average earning we calculated, right? The average earning is 12%, isn't it? 14% plus 10%, that is equal to what? 24. 24 divided by 2, that is equal to 12%. So average earning is not achieved. Yeah, the target is not achieved. If the target is not achieved, what we have to do? We have to expect that vesting period is more. Yeah, maybe the target will be achieved in the third year, whatever the criteria is of the third year. So the calculation will be like this. Again, we have to recognize a portion of the expense, total employee compensation expense. A portion has to be recognized in this year and a portion in the next year, because the vesting period has been increased because the target is not achieved, right? So 91,000, the options expected to be exercised in future into the value of option, which will never change. Value of option hamesha constant rahega. In the last 3 problems, I have been saying that value of option will always be constant, it will never change. But these things, number of ESOPs expected to avail and the vesting period might be variable, they will be variable. Okay, so see here, into rupees 30 and into 2 by 3. Why? Because 2 saal guzar gaye, 2 years has been passed, and the remaining period, not the remaining period, the total vesting period is 3. Why 3? Because target is not achieved. We are thinking that in the third year we might achieve the target. Yeah, so practically सोचो, इधर मालूम नहीं पड़ेगा थर्ड ईयर में क्या हुआ है क्या नहीं. So we are expecting that we might achieve the target in the future, in the third year. So that's why we are thinking here that the vesting period is of 3 years. Extend हो गया. So 2 by 3. Is that clear? So let's put that into calculator. 91,000 into 30 value of option into 2 divided by 3, that's equal to 18,20,000. But then according to the formula, we have to subtract whatever that was previously recorded in PNL. So what was recorded previously in PNL in the first year? We have taken 14,25,000 of ECE, employee compensation expense, to PNL. So that we have to subtract now. Is that clear? So that's why I have taken here minus 14,25,000. You all know that minus 14,25,000. So that's equal to 3,95,000. So 3,95,000 of employee compensation expense will be taken to the PNL in the second year, at the end of the second year, right? Then we reach at the end of the third year. Yeah, 31st/3/2014, there we come to know that 3,500 more options have been lapsed. So at the end of year 2, 91,000 बचा था remaining options, और यहाँ पे फिर lapse हो गया. So 91,000 options at the end of year 1, at the end of year 2 बचा था, minus इधर क्या हुआ, lapse हुआ 3,500. So minus 3,500, बचा कितना है अभी, 87,500. So formula में we have to take this 87,500, right? Number of ESOPs, number of options expected to be availed, 87,500, into the value of option as usual, and then what, we have achieved the target. The average earning is 10.333, yeah, and the target is 10%. So we have achieved the target. Okay, we have achieved the target. Is that clear? So if we have achieved the target, that means the vesting period will not increase anymore. We don't have to lapse anything. Yeah, so vesting period will not increase. The options have become vested, they have become eligible, right? So we just have to now do the last calculation of employee compensation expense, that is 87,500. The option that are to be exercised in future, yeah, the total options, remaining option जो भी बचा हुआ है 87,500 into value of option into the 3 साल गुजर गए और टोटल वेस्टिंग पीरियड जैसे सेटिस्फाई हो गया, तो द टोटल वेस्टिंग पीरियड इज 3 years ओनली. या, इट कैनॉट बी एक्सटेंडेड एनी मोर. वाई? बिकॉज द the target has been achieved. The target has been achieved, that's the vesting period. So 3 by 3, okay, lapse divided by total, lapse divided by total. समझ में आया? And then whatever you have recognized in the previous years, you have to subtract that. So in the first year you have recognized employee compensation expense of 14,25,000. In the second year you have recognized 3,95,000 of employee compensation expense. So add them, both of them together, and that would be equal to 18,20,000, and subtract that. So let's put that into calculator, everything. See here, 87,500 into the value of option into 3 divided by 3. Now it gets cancelled out, okay, 3 by 3, you know that. So it's something 26,25,000 minus whatever that was previously recorded, right? So minus 18,20,000, that's equal to 8,05,000. 8,05,000. So that's it. That's the employee compensation expense. Simple as that. Yeah, it's very simple. If you do the diagram right, if you understand and get the question proper, then everything is easy. Yeah, now let's see the journal entries. Now here we have the journal entries. Let's understand how to pass these journal entries of this problem. But I hope you already know this because we have been seeing this since 3 videos now. Yeah, so see the template over here. What we do at the end of every year, we pass these 2 entries to recognize the expense and a liability. Yeah, and then transfer the expense to profit and loss account. Yeah, that's what we do. And at the grant date, we don't pass any journal entry. We pass the journal entries at the end of every years. Yeah, here, not at the grant date. Yeah, so what do we do? First we recognize the expenses. We have to see the calculation and recognize the expenses. That's all. It's very simple. So see here, I have taken short forms over here. So see, at the end of the first year, what I have done, 31st/3/2012, employee compensation expense account debit 14,25,000, and then to ESO outstanding or ESOP outstanding, whatever you want, ESOP or ESO outstanding account 14,25,000. Okay, so I got this amount from here. At the end of the first year, we have to recognize the expense, recognize the liability. Actually, it's not a liability, this ESOP outstanding account. It's equity actually. It will be shown under reserves and surplus under shareholder funds. Okay, in the balance sheet at the end of every year. It will get accumulated, it will get increased, and then at the end we'll cancel it out. Yeah. So actually it's equity, but here for the understanding and everything, for the calculation, we think like it's liability. Okay. Yeah. Then what do? Then we transfer the expense account to profit and loss by crediting it. Yeah, profit and loss account debit to employee compensation expense account, EC account credit 14,25,000 with the same amount, right? Yes. So that's what we do at the end of the first year. Then at the end of the second year, again we have to recognize the expense 3,95,000. So the same entry, employee compensation expense account debit, EC account debit 3,95,000 to ESOP outstanding account 3,95,000. Now why are we creating a liability over here? Because you have to think like this, we are not giving them anything, right? The employees, yeah, here at the end of the first year, second year, we are not giving them anything. We are gonna give them in future in the exercise period if they satisfy the condition, the vesting condition. Yeah, if they fulfill the condition, we are gonna give them the right to purchase the shares, isn't it? Yeah, so we have an obligation now, so that's why you have to think like it's a liability. So that's the logic I'm talking about. Yeah, so that's what EC account debit to ESOP outstanding 3,95,000, and then transfer it to profit and loss. And then same at the end of the third year, here also the same thing you have to do. Yeah, according to the calculation you have to go. According to the calculation you have done 3 years, so three times you have to do that. Yeah, employee compensation expense account debit. See, this is 31st/3/2014, 8,05,000. This is the amount. Yeah, you do that and then transfer it to profit and loss since it's a nominal account, right? So you always have to transfer the nominal accounts to profit and loss because you have to close them, right, at the end of every year. So profit and loss account debit to employee compensation expense account 8,05,000, 8,05,000. Simple as that. Then what? Then the main entry is the exercising entry. What happened? At the end, 850 employees exercise their right, yeah, their options and purchase the shares, isn't it? See here, 850 employees exercise their right, their options and purchase the shares. So that entry you have to pass. So see here, 2014-15, exactly the date is not given, so we just have to take that in the year of 2014-15 it has happened. Okay, in the fourth year. Yeah, so the entry would be very simple, bank account debit, because money is coming in. Since we are not giving the shares for free, they have to pay something, but it will be a low price. That's called exercise price, right? At rupees 20 EP, exercise price. So bank account 85,000 options have been exercised. Yeah, 85,000. So 85,000 options have been exercised, and we are gonna get money on what? On exercise price. So 20. So that's equal to 17 lakh. So 17 lakh money is gonna come in. So bank account debit 17 lakh, and then we have to cancel out this liability. Yeah, I've told you we recognize the liability because we are not gonna give them anything. Yeah, in the first year, second year, third year. Yeah, we didn't give them anything. We had an obligation, but now we have given them shares. They have exercised their right, so that liability we have to cancel it out. Yeah, so this is the logic you have to have in mind. Yeah, here we didn't give them anything, obligation, and then here you give them something, you have to cancel that out. So to cancel the liability, what are you going to do? Debit that. ESO outstanding account, what? Debit, right? So now here ESO outstanding account, it always plays its game on what? Value of option. Always remember that, value of option. Okay, we ESOP outstanding account, always value on option. Cash or bank account, always on exercise price. Okay, keep that in mind. Okay, just commit that properly into your mind. Why value of option? Because you see this employee compensation expense was calculated with the value of option, and the entry also here value of option only, right? So that's what you have to cancel. Is that clear? So ESOP outstanding always value of option, right? Then what you're giving them, you are giving them the shares, right? You're not giving them cash. you are giving them shares, equity shares. So equity share capital account, you are going to credit. Your capital will increase because you are issuing more capital, right? So to equity share capital account, 85,000 options have been exercised, but in the equity share capital account, only the face value will go. Equity share capital account, only the face value will go. You all know that. So 85,000 options have been exercised into 10, that's equal to 8,50,000, isn't it? Yes. But then whatever extra amount will be there, that will go to securities premium. Now you know the value of share, not the value of option. The value of share was rupees 50. The market price was rupees 50, right? So value of share is rupees 50 and 10 rupees has gone to equity share capital account, and the remaining 40, whatever that is extra, 40 will go to securities premium. So 85,000 options have been exercised. 85,000 options have been exercised into rupees 40. Yeah, if 10 has gone to face value, if 10 face value has gone to equity share capital, remaining will go to securities premium 40. So into 40, that's equal to 34 lakh. So 34 lakh will go to securities premium account. Is that clear? Simple. Yeah, that's the entry of exercise. Yeah, exercising the option. Yeah, bank account debit, ESOP outstanding, cancel the liability to the extent how much options have been exercised, and then transfer the it to equity share capital and securities premium. Clear? Yes. And then what happened? See, at the end there were some people, there were some employees who didn't exercise their right within a year. If they didn't do that, then their options will be lapsed. Yeah, see here in the question it is said some options were unexercised, the remaining options unexercised at the end of the contractual life, at the end of the exercise period. So what will happen? And we have already calculated that those were 2,500 options, right? 87,500 minus 85,000, 2,500. So 2,500 options have been lapsed, they have been expired. So what do we do with that? We transfer ESOP outstanding account to general reserve. Whenever what options get lapsed at the end of the exercise period, we pass an additional entry for that. Okay, so ESOP outstanding account debit, cancel of the liability, because you are recognizing the liability over here and here, right? So we have to completely remove that. Yeah, we have removed here till the extent the options were exercised, but what about the options that were lapsed? So those options you have to take it over here. ESOP outstanding account 2,500 into 30. Yeah, why 30? Value of option. I've always told you ESOP outstanding always plays its game on value of options, so into rupees 30. Okay, so 2,500 options have been lapsed into the value of option 30, that's equal to 75,000. So 75,000 will go to general reserve. Okay, you have to cancel ESOP outstanding account by debiting it, since we are thinking it's a liability. So liability always have a credit balance. To cancel them, you're going to debit them, and then general reserves have credit balance. To increase them, what you're going to do? You're going to credit them, right? 75,000, 75,000. Simple as that. Easy. So this is it. Yeah, easy, right? So simple, man, so simple. Just understand the calculation properly. Yeah, you just have to think you are at the end of year one. Yeah, you are in the present, you don't know the future, and take the fractions properly. If you do that, then rest is same. Rest everything is same. Yeah, rest everything is same. Whatever that you do in the service condition problem, the same thing you have to do. You just have to be careful with the vesting period. That's all. Yeah, easy. Okay, then see you in the next video. Bye.